Welcome back. In this video, I'll be talking about market conditions and when to enter the trade and when to avoid trading. So you already know how it goes. Run my intro. Hey friends and new traders, welcome back to the channel. If you're new here, my name is Matt and I teach day traders just like you how to become profitable by teaching different tips and strategies. With that being said, let's get into this one. Alright, so I'm gonna keep this video really quick and short as possible. So pretty much the three type of market conditions that you will be looking for to know when to trade and when to avoid trading. So the first market condition that I'm going to be talking about is consolidation, or when the market is trading in a range. So perfect example right here on GU, you can see that the market has been trading in some type of a range for a bit. You see, market is clearly trading in a range. Now, there are ways to actually trade in a range. Pretty much you'd look for a couple of touches on each side to actually draw out the range. I'm not going to go into great detail with this, but I'm just going to give you guys a quick example. You have one touch, came up, came down, came up, and then it failed to come back down. So if it did come back down to the range, that's when I will personally trade it just to the upside. All right, but obviously you can see we got the breakout. So once you get the breakout of the range, you could have possibly wait for the pullback, which did come. Another thing you want to look at is market structure. So this right here would have been the last low of the range, right? And then you got the high of the range. Kind of broke out, but it kind of pulled back. So still keeping market structure, and it failed to come back lower, and it pulled back out again, taking out this high. So knowing that, we could possibly do this high, to this high, and it came down, and obviously you'll go on the lower time frame and you enter your trade right here. You have resistance and you have the 61.8 retracement, correct? And you also have the moving average. So those are three confluences to enter the trade. All right, so that's one market condition. That is the range. So try to avoid the range as much as possible as a new trader. Once you get like more comfortable with like market structure, then you could possibly be more comfortable with entering trades in a market condition where it's in a range or consolidating. So the second market condition to look for, and this is definitely when you want to avoid trading for sure, because this is the most easiest way to lose money. And you might have heard this: do not chase price. So the market condition I'm talking about is expansion, when the market is expanding higher or lower. So the thing about the market, like, it'll expand, consolidate, or pull back, and move higher. So as you can see, so say we miss this pullback right here, right? That's perfectly fine. Perfectly fine. All you have to do is just wait for the expansion higher, because once you see price starting to move up like this, you don't want to be chasing price, because say you enter like right here, or even right here, you don't know how high the actual price has gotten, right? Or when we could potentially see a pullback. And these are 4-hour candles, remind you. So you got to wait for these 4-hour candles and then some type of like sign that it has stopped. So this is expansion. You want to avoid the market expand on, you want to avoid the market at all times when you see it starting to move up, trying to jump in the trade. All right, and then let's talk about the main condition that you guys want to look for once the market has expanded, and that is the pullback. You always want to look for the pullback. So after expansion, you might get a little bit consolidation, but you are going to get some type of pullback to enter the trade. So that's when traders should look to get in. So as you can see, after expansion, so we got, maybe actually mark off mark off market structure. So we got this next high, we got a low, and we got the next high all the way up here. So pull out your Fibonacci after expansion, and you see the market starting to move sideways, giving you a sign that it's kind of exhausted and it's looking to pull back. So once again, low to high, and then we do get the pullback once again at the 61 retracement. As well, it filled in this forever paid gap, which I talk about in my previous videos, and it does come back to a return candle as well, and previous market structure. So those are confluences all the way around, plus we have the 61.8 as a reason to enter the trade, and as well as the moving average to enter the trade. So you will enter the trade right here on the pullback, not the expansion, not the range, the pullback. And as you can see, what I teach is you want to take something off once it hits the actual Fibonacci level of 0, where you started from, your starting point or your end point of the Fibonacci, depending on which way of the market you're going. So just always remember, you want to take partials off at the 0.00, just in case you get something like this where the market just happens to not reach its full potential of the negative 27 extension level. So you always get something off. So you could take a profit off right here, and then obviously the market did not fulfill, and it came back down and broke market structure. So that is how to trade in different market conditions. We got the range, which you want to try to avoid at all times as a new trader. I gave you some type of example of how you could trade it, but as a new trader, just try to avoid it at all costs. You got the expansion. Definitely you want to avoid the expansion, because when the market expansion is expanding, you don't know exactly where or how high it's going to go. So just look for it to expand, and then look for it to somewhat stop. You can see right here that it did stop right here, but I'm going to let you guys in on a little secret. If you see the market expand and then stop right here, and say there's a big expansion, and then we got the forever paid gap. You want to look for it to close in. Another thing is it didn't even touch previous structure as well. So once you see the market takes out a previous high, something the market loves to do, and this is a big secret, it will want to run a low before it goes higher. So sometimes you get something like this where it fails to go lower and then it'll go higher, tripping a lot of traders up, and then it'll actually come back down to sweep out this low, and then it will expand higher, as you can see right there. So that is a little gem for you guys. So once again, we have the range, try to avoid the range. We have expansion. Definitely avoid expansion. And the third market condition we have is the pullback, which is where you want to always look to enter. It's that simple. Just always look for a pullback after expansion, or somewhat after the range has been broken. You could look for the pullback after the range has been broken. So with that being said, I hope you guys enjoyed this video. Please like, share, comment, and subscribe to the channel. Hit the notification button. Hit the notification button. Hit the notification button so you guys can get these videos as soon as they drop. I hope you guys have a wonderful day. I am out. Peace.